Hey, everybody, welcome back. And here we go. We have seen some really crazy interest rates that are going on. How is it affecting, basically mortgage purchases? Or do we have buyers that are stepping back? What the heck is going on? And why are they still talking about what happened in May? So let's get the show on the road and, let's have a little bit of fun. All right. So when we take a look at it, it says mortgage applications fall 6.4% as rates continue to head on an upward trajectory here. Basically, as we can see, we are getting towards some of the higher numbers. We had basically our lows before we started the Iran debacle, and then shortly thereafter, things came back into play as far as with rates going up. Now, remember, the Feds, even though the Feds did not make a change, many times that means, so the stock market and the bonds, they would settle out, and many times we would actually see a lowering of rate. Sometimes we see a raise of rate. We ended up seeing a raise of rate because of the bonds selling off. Because remember, the Feds do not control mortgage rates. They can affect it, but they do not control it. And that is super important because as we come back and we take a look at this, it says higher rates are driven by weakness in the bond market, right? Today's bonds market saw basically weakness, partly because of some of the employment cost index numbers that you saw, but it also had a big part of what a different country, Japan in this circumstance, actually went ahead and started selling off bonds that were related to the dollar, buying the yen denomination bonds, which then had an inverse effect for us. So what did the U.S. do? The U.S. did the same thing. They started selling off other countries' bonds, ended up buying our bonds back. So we call that the big bond sell-off. Anyway, that then drove a lot of the pricing that you see in the upper right-hand corner. You can see how we are hitting the higher marks as it's in red. We hit the July 23rd peak, which was kind of the highest that we have seen in a while. And then, of course, when we take a look at the divide as to what is going on with mortgages and how they affect what's going on in our market, because really, all things considered, we are still, shockingly enough, 0.06% lower than we were at last year. I know, isn't that crazy? Who would have thought that even though our rates were going crazy high, we are still just a tiny, tiny little bit lower than where we were at last year. Now, is there any reprieve? Watch your bond market, watch the 10-year treasury, because mortgage rates and whatnot will follow it rather freakishly. They're not tied in any way. They just happen to follow each other. So with that, we do have, I would say, a bit of buyers just kind of holding off. Sellers are kind of seeing some of that. We're seeing just a little bit of softening in the market because of that the last 2 weeks. And it definitely showed in our numbers. So when we come over here, we take a look at the July numbers, which are in real time because today is August 1st. Top center chart there. Yeah, we're we're 6 days more than on market than we were at this time last year. So 33 days last year, 39 days this year, a difference of 6. Not a big deal. But we are definitely feeling it. So when you take a look down below, the good news is, hey, for the month of July, we started and ended the same of 97% list to sales price. Now you might say, okay, what? Okay, if I have a $100,000 house that I list at and I sell it at $100,000, that's a 100% list to sales price. In this circumstance, had $100,000, sold it at 97% of list price. That gives me a 97% list to sales price. Okay, pretty simple. The thing that we look at are trends, and we're pretty consistent. Year to date, we're down 1%. pretty much where we've been, up and down that 1% all year long. We've been this way for the last 3 years. We're a very flat market and have been, again, for 3 years. So this is situation normal. All right. So when we come back here, we take a look at the running 7-day average. We had basically 1,100 homes come on market, and we had 1,100 homes go off market. Okay. There's just a nominal difference there. The one thing is, again, we are seeing a significant number of price reductions that are happening. And it is a little bit higher than the number appended. That gives us a little bit of a warning flag because we're seeing that now for 2 weeks in a row. We need to start seeing that number drop back down. And that is merely a perception between buyers and sellers. It is much, much more of a balanced market right now. It's not weighted to the sellers. It's not weighted to the buyers. We are smack dab right in the middle, and our inventory numbers are saying, hey, at 3 months of inventory, we are getting very close to that balanced market, and that helps both sides. That just means everybody needs to sharpen that pencil. Anyway, there we go. All right, let's move along. Here's the thing. If you find anything of value here at all, anything at all, give us a solid, go ahead and like the video. There's no marketing here. It just helps others get really, really good information. And that's what the goal is. So if you would, and if you're feeling super generous, go ahead and subscribe to the channel. Again, there's no cost, and it just gives you really good information. Anyway, let's get back to it. All right. So as we see here, we're very flat and have been very flat. Our numbers here, pretty straightforward. We're down on sales by about 252 homes for the month of July, but pendants are up 251. So again, super flat. Year to date, we're off 303 homes, pretty small potatoes. However is we're up 568 more pended year to date, which, that gives us some solid information. When we take a look at average sale pricing, you can see list prices and sales prices came down just a little bit over the month of July. Now, that doesn't mean your home value necessarily went down. That just means that the average of what is being listed and sold has been heading in a slightly downward trend. Why? Mostly because of rate. Why? Because buyers are going to the sideline. When the buyers go to the sideline, demand reduces. People have to be more aggressive on pricing to attract that buyer, just like it is with new construction. Now, you price your home correctly, you're still seeing multiple offers, but our average market time is definitely on an upward trend, about 6 days year over year right now. Nothing monumental, nothing horrible. People just need to make sure that they are keeping perspective of what the buyer market is willing to say yes to. All right, moving on. Okay, as we take a look at it, really the average sale prices, just that number bobbles back and forth, each and every week. When we compare that to new construction, new construction numbers in June came up. We knew that. You guys knew that last month, even the month before that in June. And so they're going to see some interesting similar reports in July, where we still saw quite a bit of activity. End of July, suffered just a little bit. When we take a look at our numbers, we're about 40 homes off sales from where we were at last year. Pendants were down just three homes, so pretty negligible. And we're staying, again, very, very flat. When we take a look at pricing that is sold, took a little bit of a hit at the end of July. They were down 32,000 over where they were at the prior year. Again, these numbers change each and every week. So don't take this as, oh my gosh, we're going down, we're heading down with the tidy bowl man. That's not the case. They bobble up and down every week. However is at month end, it is showing that they had a slightly weaker market than what they had the prior year. August, if rates come back down, we're going to see some better numbers. And that is basically pretty consistent year over year. All right, now let's head over. Let's take a look at bank-owned homes. Bank-owned homes is super boring. Okay, so let's take a look at the right-hand column. Year to date. Okay, right now we have 39 more homes on market than we did last year. Okay. Year to date, we've only had 163 more REOs or bank-owned homes come on market than we did last year. That's a pretty small number. 3/4 of Washington state. We have 81 more sales, naturally, because we had more homes that were bank-owned. And our pendants are up by 85 homes, again, naturally. But if you take a look at, the center column, which was July, you'd look at that and say, oh my gosh, pendant sales are up 47%. That's 15 homes. Pretty small, right? When they talk about, oh my gosh, new listings on market are up 85%. That's crazy. It's Armageddon. It's 34 homes. It's negligible. All right. So again, small numbers when they're doubled, they may become a bigger number, right? As far as a percentage. So keep that in perspective. And again, there's a lot more opportunities out there than trying to find a good deal with the REOs, because they just do paint, carpet, and vinyl. They get it on the market at market value, and they get them sold. We're still one of the 5 sweet spots across the United States. So with that, if you guys have any questions, put it down below. Love to hear what you guys have to say. Again, if you're feeling super generous, subscribe to the channel. In the meantime, you guys have an absolutely beautiful weekend, and I will see you on the next video. Take care.